So let's have a closer look at oil. The U.S. and Iran are holding these high-stake talks in Geneva over Iran's nuclear program and under the auspices of Oman. There are fears, of course, that the Americans, who've got 2 aircraft carriers, multiple other military assets in the region, are set to launch an attack on Iran to increase pressure on that nation to abandon or at least curtail the nuclear program. Let's get more from Matt Smith, lead oil analyst at Kpler. Matt, thanks very much indeed for joining us. I know following oil daily fluctuations is a mug's game, but is there any particular reason why oil will be down today?
We've been up, we've been down, we've been up, we've been down today. It's like a yo-yo, right? It's just moving on sentiment. But I think the broader picture, Andrew, here is you buy the rumor and you sell the fact. I think there's just the risk of an incursion by the US into Iran. It appears that the talks in Geneva have not gone well. So from that perspective, it seems as if a strike is going to be more likely than not. President Trump has given 10 to 15-day window, right? He said that about a week ago. So we have the expectation here. He doesn't talk in riddles. He's fairly straight in what his opinion is. And so everything he's been saying in recent days, he wants to see Iran coming to the table, drawing back on those nuclear ambitions. If they're not willing to do that, then there's going to be an incursion. And that's basically what it boils down to here, right?
Now, we've seen interesting behavior from countries under sanctions. Let's start off with Iran. Iran has lately been accelerating exports. Is that trying to get crude out of the country before an attack?
Yeah, absolutely. That's what it seems, right? So typically we see them loading about sort of 10 to 12 million barrels each week. Last week, we saw them loading over 26 million. So they're rushing these barrels out of the country here. And so that's just a signal that they are preparing for some type of escalation in the situation here. The thing to bear in mind with this, Andrew, is that Iranian crude can only go to one place. There is only one buyer, which is China. And so it's likely that these tankers are just going to head and sit offshore Malaysia, offshore China there, and wait for China to buy them. So they're getting out of the Mideast Gulf, but it appears that they're doing this because of a risk to their country, as in terms of Iran, as opposed to them looking to try and close the Strait of Hormuz.
And and China has been bringing in more Russian crude. They have been a huge buyer of Iranian oil, though, as well.
Yeah, exactly. So they've been basically the only buyer of that Iranian crude, right? And so we see 1.2, 1.3, 1.4 million barrels a day being discharged. But they have dialed back on that, Andrew, in recent months here. And we've been seeing that crude instead building up offshore China. But to your point, in terms of the Russian flows, we've seen India pick up so much of that crude in recent years here, up to sort of 2 million barrels a day of Russian material going in there. Now, India has dialed back because of pressure from the US government on them. We've seen those deliveries drop by about 500,000 barrels per day. Guess what? We have seen a pickup into China in particularly this month of about 500,000 barrels a day. So it's those Urals that are going from kind of the Baltics, the Black Sea there, all the way to going to China. So a long journey, but there's a huge discount for this crude simply because there's really nowhere else for it to go. So there's a common theme about these countries we're talking about, right? Iran, Russia, Venezuela has been taken out of the picture somewhat here, but they are discounted barrels of crude because they have very few destinations that will buy them.
The Saudis, meanwhile, have been exporting more crude as well.
Yeah, they have. So we have seen them pick up by about 400,000 barrels a day so far in February here, and we're about to close out the month. And so that's a trend that we have seen over the last kind of 4, 5, 6 months, something like that, where in September, we really saw Saudi crude exports pop by about 1 million barrels per day. And then we've seen them holding around 6.5 million barrels a day in recent months. And now they're up close to 7. Now, the thing to bear in mind, some of this is to do with seasonality as they burn less for power generation at home during the winter. That said, it is our expectation for Q2 and Q3 here that we're going to see OPEC unwinding production cuts again. Bear in mind, Andrew, they've paused for the first quarter of this year, but by all means, they've got to be fairly delighted with where prices are right now, given the expectations of such a supply glut coming into this year. So our expectation, they're going to be able to increase those exports potentially further as they unwind cuts.
Yeah, there's talk of possibly an OPEC production or production increase in April.
Yeah, so that's what we're looking at here. And so just Q2 and Q3, you know, they've had these tranches. It's all been very complicated how they've layered these in. And so they've unwound that first tranche. They've been unwinding the second tranche, but they've hit pause on it. But we expect them to start that back up again. That will clear out that tranche there. It will just make things that much clearer. And then going into next year, you know, the outlook for core OPEC in particular, Saudi Arabia, UAE, Kuwait, is going to be much better here as they are putting more barrels onto the market. They're claiming back market share, but they are also the ones with spare capacity, whereas others in the world just simply do not have it.
And what about Cuba? Now, Cuba's had this awful crisis with oil, but some Venezuelan crude has been making its way there, even though the Americans control Venezuelan oil flows.
So it's been paused for the last couple of months, Andrew, but traditionally Cuba has relied upon Venezuela for Mexico for all of its crude needs. Venezuela also supplies clean products in there as well. But as we have seen with the US putting pressure on Venezuela, not putting boots on the ground or putting military pressure on them, but simply pressuring them via energy, using that as a weapon, the US is doing the same thing with Cuba. Now, Cuba has had its deliveries halted. And so basically, you know, you've had flight cancellations, you have public transport that isn't working, you've got schools closing, you've got government workers furloughed, all these things because they're basically being strangled off from having that energy. But now the US has come out and said, okay, the private sector has the ability to now buy this Venezuelan crude. And let's not forget, it is the US that is basically operating the situation on the Venezuelan side of things in the background there. So they are holding the power, and so this is going to be somewhat to the benefit of the US being able to control those flows. Because one other thing, Andrew, we have seen a tanker that we saw a ship-to-ship transfer in Cyprus in the lightering zone there. So it was probably picking up Russian diesel. It was heading towards Cuba, and then yesterday, just before this news came out, that tanker halted and it stopped in the mid-Atlantic here. So all changes, all going on, all relating to sanctioned tankers and sanctioned crude, right?
Yeah, they didn't want to get seized by the U.S. Coast Guard or military. Yeah. Matt, always great talking to you. Thanks very much indeed.
Thank you.
Matt Smith, lead oil analyst at Kpler.